Good afternoon, one and all. I'm Shubhendu Vimal. This webinar is regarding the program of BBA Finance and Accounts. I've been associated with the University of Petroleum and Energy Studies for last 3 years. Prior to that, I was working as a commodity analyst in Hyderabad in MBT group of companies. And the topic for today's webinar is career prospects in finance trade. Index for the current webinar includes introduction, finance decisions, career in finance, career paths, finance sector in India, and road ahead. So we'll be taking all these points one by one in order to understand that what are the jobs and what are the career prospects in the finance domain. But before we move on to this, we should first understand that what is finance? Finance is a broad area which defines two activities. One is to learn or to study how to manage money, and second, to learn or to understand the exact process how to source fund in order to be operative. Now, apart from individuals, corporate, government, all require money in order to operate. So, the finance function or finance domain has been classified into three subcategories, which are personal finance, corporate finance, and public finance. Now, all these three categories dwells into same set of activities like low cost risk, low cost credit, investment, bank, balance sheet, but still they have a different nitty-gritty for each of these. For example, if we take the case of personal finance, this basically deals with a person who has to invest throughout his working career so that he or she will have a guarantee for pension when he retires. As far as corporate finance decisions are concerned, this is mostly about decisions like what should be the source of fund, whether it should be debt or equity, and in what proportion. Public finance deals mostly about, apart from managing public's money, framing policies which will lead to a stable economy. So basically, the whole stream of finance has been divided into three broader categories, which are personal finance, corporate finance, and public finance. Now, moving on to the four basic financing decisions. A finance manager is supposed to take four important financing decisions or finance decisions, which are investment decision, financing decision, dividend decision, and liquidity decisions. And these are the four objectives you could say, or you could say that these are the four basic areas which requires most of the decision making by any of the finance professional. Starting with the investment decision, the first decision, which is the most important, it is about where to invest. We know we have land, labor, capital, and entrepreneurship as four of our important resources, and we also know that capital is not unlimited. Capital, there is dearth of capital, so we cannot just invest everywhere. So the first decision, which is investment decision, this basically tells us about where to invest and also where not to invest. Now, two important aspects of investment decisions are evaluating the prospective profitability or future profitability of the investment which we are making and measuring a cutoff rate. By this, we mean that when we invest, we have to tentatively, or we have to basically predict that whether this project is going to be profitable or not. So we are basically predicting that in future what will be the cash inflows if we invest into this asset or in this investment. Second is that comparison has to be done keeping into consideration one of the cutoff rate or bank rate or discounting factor or discounting rate. So these are the two important things. So basically investment decision tells us about where to invest. This is the first and the foremost decision in the finance domain. Second is financing decision. Financing decision basically means from where to source fund. In general, we have two broad categories of fund. One is debt and another is equity. Now, both of these sources have their pros and cons. Like debt, though it is cheaper, but it is more risky beyond a limit. On the same time, equity is costly, but risk is less. So there is a tug of war, and a finance manager has to obtain the best financing mix or the optimum capital structure where the cost is least and the risk is also less. So a finance manager is supposed to design such a capital structure which is optimum. And by optimum we means least risk as per the cost, vis-a-vis a particular cost. Third decision is about dividend. Now, dividend decision includes whether to distribute all the profit, retain all the profit, or to distribute a portion of the profit and retain the balance. This decision is basically based upon the preference of the shareholders, whether they are looking for a current or a recurring source of income or they have invested for a long-term planning in order to achieve appreciation in terms of their initial investment. Also, again, while making dividend decision, a finance manager has to take this into consideration that if all the profits is distributed, a organization or corporate is not left with much amount to expand in future, especially if it is a new organization. But on the same time, in the same time, if an organization is not at all distributing profits, then this might lead to reduction in the value of the firm because few or many shareholders might expect some amount of dividend against the investment which they have made in a particular organization. Final decision is about liquidity decision. Liquidity decision is again a trade-off between liquidity and profitability, and a finance manager has to decide that what amount of money a firm should keep as liquid cash so as to honor all its obligations whenever required. At the same time, they have to consider this fact that they could invest that amount of money in order to earn profit. Basically, it's a trade-off between profitability and liquidity. We could understand this like if you keep very less amount of money as a liquid cash, obviously the firm would be investing it for in order to earn profit. But at the same time, there is a risk that the firm may be declared illiquid. On the other hand, if a firm is keeping good amount of assets in as liquid cash, they are losing opportunities to invest it and earn profitability. So a finance manager has to balance this trade-off between profitability and liquidity. So these were the four decisions which a finance manager is supposed to take. Now, moving on to career in finance. Career in finance isn't all about money, but it is close to this. Now, the key is that the finance job has its several branches, and every individual has certain set of skills which he or she possess. So the key is that an individual should find out that what are his or her set of skills which he possesses, and he has to align them for a particular job. Basically, the key to individual success is to research, locate, and land the financial job that has the greatest compatibility with your own skills and your own interest. Because finance is a very vast stream. We'll in the coming slides, we'll be learning about the various career paths which are available in the finance domain. But first, you have to understand what skill set you possess, and you have to match, align your skill set with the available jobs in the finance sector, in the finance domain. And this, if you are able to identify that I have this set of skills and they are very much suitable for this particular subset or niche of the finance domain, then you can excel and you can go up to any level. Moving on to the career paths which are available in the finance domain. These are corporate finance, commercial banking, investment banking, hedge funds, private equity and venture capitalists, financial planning, insurance sector, public accounting. All these are the career paths which are available for an individual who want to pursue his career into the finance domain. Now we'll be taking up with all of these career paths one by one, starting with the corporate finance. As a corporate finance individual, uh, the job involves working for a company in the capacity of finding and managing the capital which is necessary to run the enterprise. This should be done, and this should be done in such a fashion that you are able to source fund, and you are able to source fund in such a fashion uh, that the source from which you are sourcing fund should also reduce the financial risk. You cannot just source the fund. So a corporate financial guy is supposed to, or an individual is supposed to source funds for the organization by maximizing the corporate value and reducing the financial risk. The function you may implement while in such a position include setting up the company's overall financial strategy. Like, as a corporate finance person, you have to decide upon the future course of action, or what would be the strategy of this organization or the financial strategy, which includes decisions like whether you can invest in this new project, whether you should scale up the current operations of the organization, or whether you should renew some old projects which you were already doing as an organization. So this could be one function or one job as as an individual which you are supposed to do. Next is forecasting the profit and losses of the organization. This is again a strategic. This is related to these strategic decision making, that you have to forecast that what are the profits, probable profits or tentative profits or losses if we invest into this asset. Negotiating the lines of credit. A corporate finance person is also, it is his responsibility to source funds at the cheapest rate. So you have to negotiate with various banks based on the ratings of your organization, and it is your responsibility to get the cheapest fund, simultaneously minimizing the risk, preparing the financial statements, coordinating with the outside auditor. So as a corporate finance person, as a corporate finance individual, you are supposed to do all of these. Moving on to commercial banking. Commercial banking in our country is very wide, it's very vibrant, and it's even before independence. Commercial bank, from large entities to local institutions, offer a range of financial services like saving accounts, IRAs, individual retirement account, loans, all these. And career options available in this sector include bank tellers, loan officers, operations, marketing, and branch manager. Also, if an individual is very talented and hardworking, he can or she can advance his or her career from a local branch to the corporate headquarters, where he could deal with the international finance operations like credit making, credit risk, and all such activities. So this is another area which provide a lot of scope for the finance domain. Coming to the third one, which is investment financing. Oh, sorry, investment banking. Investment banking includes the most lucrative of the job in the finance sector. Investment banking job is to facilitate or to help corporations or organizations to source fund through various available investors. And investment bank jobs deal with facilitating the issue of the corporate security and making these issues and security available to all the investors to purchase them. Basically, they act as a middleman, that somebody wants to source fund and wants to sell the securities of the company, and other persons are having extra amount of money and they want to invest. So investment banking person is supposed to bring all both these bodies together and facilitate the this transaction. Working in a traditional investment banking firm would allow you to interact with issuers of security, mergers and acquisition professionals, or the trading desk, which trade stocks, bonds, and other securities in the secondary market mostly. Investment bankers also uh, guide corporations and organizations while taking the decisions of mergers and acquisition. That this particular firm, what's the exact value of this firm, and only then a corporate or organization could take decision about acquiring that firm. These are the few examples of investment banks, which are ABN AMRO, ANZ Bank, Goldman Sachs, Citibank, Deutsche Bank, JP Morgan, DSP Merrill Lynch, Morgan Stanley. These are the few famous investment banks. Now coming to the hedge fund job or hedge fund area. Basically, hedge funds are set of very aggressive investment where the sole aim is to earn high returns in a short span of time, and this area is for those individuals who are aggressive in nature and aggressive in terms of investments, who are not risk averse and who want to earn higher return in a shorter span of time. Hedge funds are largely unregulated private investment funds whose managers can buy or sell a wide array of assets and financial products. Because of the mystery that surrounds this type of entity, hedge fund jobs are considered by many somewhat glamorous. Typical hedge funds job include financial analyst, trader, regulatory compliance officer, quantitative analyst, marketing manager, portfolio manager. Now a trader, well, I mean, this might come that what's the difference between a trader and a investor? So trader is a person who hold an asset for himself or for someone else, and you could differentiate between a trader and a investor based on the time for which a trader holds an asset. Generally, trader holds an asset for a shorter span of time, and an investor holds an asset or into an asset for a longer duration. Now, quantitative analyst, one could get a good job as a quantitative analyst. And who is a quantitative analyst? A quantitative analyst is a person who tries to predict financial markets using complex mathematical models. He tried to uh, measure the risk by assigning a number to a asset and using those advanced models to quantify or to mimic that mimic the finance domain. Marketing manager is basically who's supposed to sell these hedge funds, and a portfolio manager finally. The job of a portfolio manager is to construct a diversified portfolio of different assets so as to maximize the return, especially in case of hedge funds. These are the few examples of hedge funds like JP Morgan, BlackRock, DE Shaw, India Deep Value Fund, Fair Value Capital, etc. Private equity and venture capital. Now, private equity professionals help, what they are supposed to do is to help business find capital for both expansion and the current operation. The difference is that private equity directly reaches the organization where it is invested. At times, private equity job may involve working as an interim executive at a company who's looking for a turnaround or a buyout. Private equity firms are like IDFC, New Silk Route, Chris Capital, Incofin, ICICI Ventures, UTI Ventures, JM Financial, Kotak Private Equity Group. These are the examples of the private equity firms. Venture capital. Venture capital professionals spend most of their time with startups or Small, fast growing companies. Venture capital firms evaluate pitches by founders and small company leaders to determine if the firm will make an investment. Sometimes referred to as vulture capitalists, venture capitals are known to structure deals that favor the investor, not the company receiving it. Basically, venture capitalists are the guys who facilitate the funding of those organizations which are startups and who are not able to source fund from the traditional sources of funding which are available at a point of time. So their job is to find out those organizations which are ready to take risks and to invest in organizations which are just coming up. Obviously, the risk is high for the new organizations. The hope for the venture capitalist is that the funded company will soon go public, that is, it makes stock available on the public stock market. Venture capital is a tough business where the failure rate is high, but rewards are really huge. So, this is one area for the people who are ready to take risk. Financial planning. Financial planners help individuals develop plan that will ensure their present and future financial stability. Typically, they receive a client's financial goal and generate an appropriate plan for saving and investing that fits the client's individual need. The plan may focus on wealth preservation or investment growth and may even include estate and tax planning. Most financial planners work in either large nationwide groups or smaller locally based firms. Generally, financial planners with the certain certified financial planner designations are most in demand as they must obtain 3 years of financial planning experience after passing several examinations and meet continuing education requirements. Now, once we are done with the various career prospects or options which are available to a graduate who wants to pursue his or her studies into finance domain, let's move on to the finance sector in India. India has a diversified financial sector undergoing rapid expansion, both in terms of strong growth of existing financial services firms and new entities entering the market, especially post liberalization. The sector comprises commercial bank, insurance companies, non-banking financial companies, cooperative bank, pension fund, mutual funds, and other smaller financial entities. The financial service sector has been an important contributor to the country's gross domestic product, accounting for nearly 6% share in 2000 in the year 2014 and 15. So, finance sector in our country is booming, and there are a lot of upcoming jobs which are there in this area. Finally, the road ahead. India is today one of the most vibrant global economies on the back of the robust banking and insurance sector. The country is projected to become the fifth largest banking sector globally by 2020 as per the joint report of KPMG and CII, Confederation of Indian Industry. The report also expects bank credit to grow at a compound annual growth rate of 17% in the medium term, lending to better credit penetration. Life Insurance Council, the industry body for life insurance in the country, also projects the CAGR of 12 to 15% over the next few years for the financial service segment. So, in the coming year, there is a lot of scope for the individuals who want to excel or who want to develop or who want to choose finance as a career. Thank you. Sorry. Till how much time will it take? Thank you.